Good morning all, CamelbackTrading.org coming to you this Wednesday morning, January 6th. We're looking at the SPY ETF's market profile here on Window Trader. And boy, do we have some contrast today in what's going on in all the different indices. Well, first and foremost, looks like the Dems have swept. You would think the market would at least initially not like that, but right now it looks like it's picking sides on what they think is going to benefit from that. Here's the Russell exploding out of an inside day to the upside right at its all-time high. Now, earlier it was trading above 202. We've come in $1, so we'll see if we're going to get the all-time high. But regardless, unless things change dramatically, we're going to have a very nice gap to the upside out of an inside day. Now, everybody yells gap rules apply. Well, you know the context I put that in. If you're trading the Russell, a couple of things. I don't want to be a buyer literally at the all-time high for a couple of reasons. Number one, they might front run it. Number two, you might get an inventory adjustment. So if it was to open and run, I wouldn't care if I missed it. I'd rather see if we get an inventory adjustment, get a reasonable trade entry where your risk reward is better against the gap, and then possibly go for the all-time high. Now, NASDAQ, different story. Inside day, looking to gap possibly to the downside. Kind of surprising, considering that big tech fueled this blue wave. But right now, they're looking to gap low. Now, it's not a big gap by any stretch, and we still have 75 minutes, so a lot can happen. So if you have a gap of 50 to 75 cents, that's a good risk reward to take a put play. If it comes back into yesterday's range, you're out. If not, good chance you'll go and trade at January 4th's low. But again, there's still time. But right now, possibly looking to gap out of an inside day to the downside. And then we have the ES and SPY. We're in balance in value. Bottom line in this is B's high, I told you this yesterday, is my go, no-go line. This is where change took place yesterday, and buyers held it for the last 2 hours of the trading day. Right now we're below it. Now again, there's 75 minutes to go. If we cannot get back above B's high, then the odds of traveling to yesterday's low and coming out of an inside day are certainly a lot better. If they get acceptance above B's high, then obviously the destination will be yesterday's high and see if we come out of the inside day to the upside and then start going for the all-time high. But right now, we're in balance in value. It's undecided. Very good volume again this morning. 1.7 million already with 75 minutes to go. So you're going to get your opportunities. We've had very nice opportunities so far these first 2 trading days of the year, and we're going to get another one today. The bottom line on all of this is it shows you what really matters. 2 things. We trade what's in front of us on a daily basis because the market doesn't care who's in office. The market doesn't care about the economy. The market overall, and the S&P doesn't care about earnings. Yes, individual stocks do. The ETFs don't. So we trade what's in front of us. And number 2 is the Fed backstops the market as of now. That's it. Plain and simple. Those are the 2 things we need to know. As far as the Fed, their minutes come out today at 2 p.m. It should not be a big deal. In the past, when they used to just announce the rate decision and not have a press conference, well, then those Fed minutes were very important when they were released. Not anymore, because the day of the Fed, the rate announcement, they hold a hour-and-a-half press conference like it's a talk show gambit. So the Fed minutes should not have that much of an effect today. So we trade what's in front of us and the Fed. Those are the only 2 things that matter in the stock market. So destinations and a game plan right now in SPY and ES. You should have all the destinations I gave you yesterday. Right now on the upside, we have 372.50, which is yesterday's high, and then the overnight high is 372.89. We still have those single prints, 372.61 to 373.11 from January 4th. We never took those back yesterday. For the downside, I told you your destinations are far and wide apart. So right now we have the price spike. We're below it. If they don't get back above it, our next destination is not until yesterday's low of 368.05 and our pre-market low of 368.04. Very visual area where it's a weak low against yesterday's low. So there's a very good chance we'll test yesterday's low if we do not get acceptance above B's high. And then below that we have 364.82 and then again the monthly low of 362.03. So if sellers ever got their act together, they can get something going because algos are heat-seeking missiles, and right now there's some far and wide destinations to the downside. And then on the charts, just going to show you the daily. That's the important one. Inside day. You come out of it, you go with it, and monitor it for continuation or lack of. That goes for all of them. The Russell, Qs, SPY, ES. That's very important to follow those rules. If we're able to get above B's high and take out yesterday's high, the all-time high will be the next destination. If we come out of this inside day to the downside, well, then the Fort's low of 364.82 will be the next destination, and if that gets taken out, we're going to go test last month's low. And then the 50-day moving average becomes a very big target also. Good luck trading today. Have a great day, and we'll recap at 4 p.m.